John Higgins, Mortgage One. Happy Monday. We've got the Federal Reserve meeting coming up this week. We've been talking about it the last couple weeks. Be interesting to hear what our new Federal Reserve Chairman, Kevin Warsh, has to say. We're looking at about a 1 in 3 chance of a rate hike. I don't see it coming, but it is out there with all of the geopolitical issues that we're dealing with, and higher oil. Inflation continues to be an issue, and that is the number one enemy to lower interest rates. The Fed's primary tool to combat inflation is raising interest rates. So we'll have to watch and see what comes of the announcement and the statement, and then the follow-up with Kevin Warsh. A couple items I thought were interesting. Starter homes are defined as any listing price below $350,000. That's 80% of the local market's median sales price. So $350,000 to me doesn't sound all that affordable, but that's where we're at for somebody entering the market. On average, affordability has been an issue, and it certainly is not going to end anytime soon. 30-year fixed rate up above 6.5%, and we're week over week higher. New single-family home sales did increase, but we're starting to see prices on new construction coming down. Got a 9.3-month supply of new homes, so builders not participating quite as much in the market that we have as maybe existing home sales. Total housing starts also are up a bit, so that's good. We need more housing to kind of balance the market out. And then June home sales on the pending side declined 5.4%. So getting some cross currents here. Obviously, as interest rates head higher, makes our market a little bit more difficult for the people that need to buy those homes. Those would be our move up and our first time home buyers. Where are we at on interest rates? Well, not very good. 10-year Treasury did touch and exceeds 4.7% last week. That's really not good. Staying above 4.6% for too long creates a floor of resistance at that 4.6 number. We had a little bit of good news today, so we're back off some of those highs, but really interest rates are struggling to maintain a grasp on 4.6% right now, which is a key figure. As I mentioned, the Freddie Mac survey, we're at 6.58 on a 30-year fixed rate. And if you look at the graph on the lower end of that graphic there, we've been up, and up over the last number of weeks. Might get a reprieve if the Fed has a few good things to say, but right now we're stuck in a range, and that range is at the higher end of where we've been over the last 6 months for sure. We're not quite as high as we were a year ago at this time, but really doesn't feel very good now, does it? Speaking of interest rates and how high they are and the affordability issues that our home buyers are fighting, a couple great options to beat that. MSHDA has a couple different programs out there. We all know about their DPA option offering $10,000, but they do offer a non-DPA program with a fixed rate at 5.75%. So this is an option for your buyer that might be buying either first home or in our targeted areas, which is much of the state, to be honest with you. They might be able to lock in that rate at 5.75%. Fantastic program, little known because MSHDA is more famous for their $10,000 option. They also offer a mortgage credit certificate. We call that MCC. You get a tax credit of 20% of the interest paid each year on your federal tax return. So that's direct money back. It's not an itemized number. It does apply to the life of the mortgage. So year after year, you'll get that 20% back. Just like the other programs, it's first-time home buyers and repeat home buyers in targeted areas, primary residences. There are income limits by household size in the county that the home is in. Max sales price, MSHDA made a change a couple years ago, and we're at $544,233 this year after indexing, which is great. The fee for the MCC program is just $400. So for most buyers these days utilizing this program, they're going to get that money back quite quickly. It's a benefit that just keeps on giving as long as they're in that mortgage. Give me a call with questions on these two great programs. Would love to help your buyers find a way to either get into a home that might be just outside what they qualify for, because these programs do help us qualify. Or somebody that's sitting on the sidelines thinking that rates are just too high, the options of buying versus renting just aren't there. This program may give you a reason to call your client, your prospect, and get them off the market and into a home. We'll talk to you next week.